Recording in progress. Good evening, everyone. Welcome. Again, I'm your substitute teacher for this evening. We could do some lotto hunting, but that's not what's going to happen here. We're going to go over some SPI, SPX, ES, that whole group, QQQ, NQ, IWM, and then a few of the sectors that are brewing up pretty hot and tasty. Also want to look at a couple tickers and then maybe hop on bar chart to compare some of the contracts. So here we go. I'm going to share my screen. Everyone see that bad boy right there? Ooh, Apple. Nobody's looking for you, Apple. Lagging in. So right now I have a blank chart, no indicators, no anything. I want to peep at futures. I always start with ES futures. And I like ICT kill zones because of the way it breaks down the session. If you haven't used it before and you're starting to break into ICT strategies, this is a great indicator to have because it's a visual representation of where the sessions are taking place. So that is a little tidbit there. I'm gonna put these bad boys on. I have my ICT kill zones set to where you can only see them on the 30-minute. So we're going to go ahead and come here and drop down. You see those colors? Do we need to change the chart colors? Because I know sometimes the gray is a bit much on people's eyes. It's not the most appealing. But this is what it looks like as far as the kill zones. This is the PM session for New York. This is the Asia session. This is the London. This is going to be our AM.
I did really good today. Pumping.
Nobody cares. Mute. All right. Everybody muted. Cool. So I'm going to come back to the monthly. And we are currently a failed 2 up, but we still have plenty of time, like 22 days. Let's not even trip. But I still want to glance and see where we are. So I'm going to also throw on really briefly the strat. I do not technically use the strat the way it should be used. I really just keep it on to see where my threes are. And I might draw a little broad information, like right here. So based off of that, we're at the top here. And I will also draw from this swing pivot. And if you're not familiar with chart patterns, right here we have kind of a cup and handle situation. But as we throw fibs on here, we might be at the extension of that cup and handle, which we kind of are 1.38. We're at an extension. So we should get a nice tiny reversal, but again, we're still in an uptrend. Zoom out and see the picture. Do not think you're going to be the smart one who's going to catch the black swan events and carry it all the way from this broadening formation to this broadening formation in one trade. That's not happening. Let that pipe dream go. But we can position ourselves for this upcoming week. And we went 3-1 on several tickers. So I'm pretty sure that is considered to be, is that Nirvana from the strat? Anybody chime in on that? Correct me if I'm wrong. I do not know all the cute terms.
No, you're right. You're right.
Okay, thank you. Thank you. That's Nirvana. It's not the Holy Grail, but we're in Nirvana. That's so lovely. So setting my chart up for this, we're going to go ahead and mark the top of the weekly, the bottom of the weekly.
Wait, I thought 3-1 was the Holy Grail, no? Am I backwards?
Correct me again. I know 2-1-2, 3-1-2, PMG.
They're vice versa.
So 1-3
So the
is
1-3 Holy Grail.
It's the same as in Nirvana. It's the same thing.
Okay.
I'm pretty sure.
no.
All
The
right.
Holy Grail is 3-1, and then Nirvana is 1-3. That's my bad.
So here's the kicker, you guys. Ready? We got both of them. We went 1-3. We took it to Nirvana, and now we about to hit the Holy Grail. Look at that. Won't he do it?
Amen.
But here's where we are currently. And this week, because futures is already opened, this is where we're trading. So I'm also going to mark the tops and bottoms of this 3 because you want to look at your previous candle. All right. So now what we have here is we constructed a range, and I will drop down from this range to see what the daily is doing. And here's our 3, 2, 1 on the daily, because technically that went 2 down.
What the fuck are you listening to?
And the charting.
So here we are. On the daily, we have everything to the downside on the higher time frame. But I see this other broadening formation here and another 3 here that's going to create another broadening formation. I'm going to draw it because I want to, again, see what my expectations are going to be on a realistic time frame. In case you guys are wondering, I am more of a 0-day trader. I do small swings like weeklies. Rarely do I do leaps anymore. It's just a personal preference, but we can still look at some swings and find some longer dated positions. So I'm going to draw my broadening formation off of this 3, coming up in Chandra, again, creating a tighter range. Now I'm going to drop down to my 4-hour. Ooh, another broadening formation. They just won't stop expanding the price. So we kind of hit the bottom of this broadening formation. As you can see, we had the data released on Thursday, right before the NFP data, on Friday morning. And we just took it, boom, from side to side, right? And that was a hell of a drop, a great day. But here we are, we came right back up to the middle point. So being that we had this broadening formation here, I am going to draw it kind of tight and break through because we want to see how this rejection. One of the things you can remember with trend lines and with broadening formations is that you will have your bodies typically stay under. Sometimes you're going to wick, but just because we wick doesn't mean that we are outside of the range. The wick does the damage, the body's telling us the story, okay? So we'll go ahead and draw the bottom of this one as well. And then I'm going to drop down to another time frame, the 2 hour, so we can see how we responded and where we might be able to find a quicker trigger. As it stands right now, we're above 50% of where this range is. However, overnight, I'm going to see what we're going to go for Forex Factory and see what kind of data we have coming out. Because we have CPI on Wednesday. I'm very curious to see how we actually trade leading up until Wednesday. I think it's a very good probability that they have us trading sideways. Yeah. We don't have too many red folders. We have a bond auction. But no, this is where we're
Something
at.
we can keep in mind though is bank has earnings this week, and
Yes,
those are the
XLF is on my
I saw, to be honest with you.
XLF is heavy on my list. I also know that one of the other members in our group posted a chart about Wells Fargo, Citi, JP Morgan, all of these things. I wouldn't be surprised to see them pop up in bot chat. So we'll definitely take a peek at XLF and see what we can pop off with there. So here I'm at, right here. I'm looking at these wicks because I expect that we're going to come back here. This is where my eyes are targeting for quote unquote liquidity. When we go to the upside and I'm looking for any wicks, I don't see where we have too much to come up and grab. Even though we could use this as a pivot area, this is again 50%. Depending on how things shake, we're in the middle right now. One of the things that I will throw on now is smart money concept, one of my favorite indicators, just because it provides me so many different things within one indicator. So I want to talk about it briefly so you guys might be able to incorporate it, especially those of you who are studying fair value gaps or ITT concepts. This one is kind of a little cheat code. Within this one indicator, you have market structure listed. You have order blocks provided.
All right, I'll break off at home. I'll be back.
And then you also have fair value gaps. If you do not
Need to
like
bring it back.
all of
Need
these
to-
things at
what
once,
that gravel was I made.
ooh,
Hey, y'all
maybe.
mute if you're
Can
gonna
you
start.
mute? Can you mute?
So,
Just go ahead and hit that mute button. Not that we don't want to hear from you. We don't want to hear what you got going on in the background. God bless you. So here with Smart Money Concepts, we have fair value gaps. Another good indicator
You
for fair
cleaned
value
up
gaps.
after the gym?
Okay, all right. Let's go ahead and let me get to the admin part of this so I can mute y'all. You sure everybody is muted?
Nah, I just was wondering what the fuck this charger does.
Mute. Mute. Okay, I think I got everybody. But fair value gaps, the other indicator that I like if you don't want to deal with all of these things on your chart, Nephew Sam. This is probably one of my favorite, fair value gaps by Nephew Sam was very instrumental in helping me learn how to study fair value gaps because I know several beginners had made mention of that. So let's come back here. Now that I've got Smart Money Concepts on here, let me frame my narrative. Right here, I have internal order blocks on the bearish side. So I expect some kind of resistance in this area, right near this change of character. I would mark this 52.86. I'm going to label it possible resistance or bump in order block.
See, I already marked them on my charts earlier.
See, you ahead of the game. I saved this just for y'all because, again, I started this conversation telling y'all, don't have kids. Wrap your tool before you fool, but they're my biggest blessing. It's too late for a lot of them, but in a good way. So we already have the 51.91 marked, and that's the bottom of the week. But we have a strong low present here. So I'm also going to mark this because I would love to see how we respond to this level. And when
One thing also, can I say something?
Mm-hmm.
We are right dab in the middle of a fair value gap right now.
Yeah, right here. That's what I'm saying.
It could do
We're
anything.
in the middle. We're in the middle. That's I'm thinking they keep us kind of sideways as a result of that.
My theory is to touch the top of that gap.
So now, like if I drop down to a smaller time frame and we look, right now Asia is trading below the PM session for Friday. We're kind of stalled here. We're going to be trading sideways until we get some real push like from the news. We can come up here, bounce down, come back midway on this gap. And if you really want to get funky with it, y'all, go back to this day here and throw some fibs on. Because this one candle went from order block to order block, from bear to bull. So they just do price rebalance real quick. This is price rebalancing itself. And again, as previously mentioned just a moment ago, we are in the middle. This will be a lovely little shoot down and pop back up. I'm not going to anticipate. We're going to react accordingly. That is what I'm marking on ES features for now, because these are areas I want to see responded to before I jump in a trade. Because I look at my chart like this in the morning on the one. We're not doing that right now. We're just getting our levels. So I'm looking for any kind of reputable chart pattern. Boom. This looks like it could be maybe a bullish pennant on the hourly if we really wanted to make a case for it. Come back up. That's how that would work. I'm not going to anticipate it because they'll hurt your feelings. The market will market. The main levels to watch on ES futures, again, my 52.86. And we're coming back to, I would say, right here, 52.26. And I know I have it marked on another chart, so I'm not stressing it. We're just bare bonesing it right now so you guys get a feel for how I look at it. NQ. Let's see what the NASDAQ's doing. Same thing. I want to start month down, get some broad informations on here real quick so I can get what range we're in. Boom. Be quick about it. Come to the weekly. I want just this range here. I don't want to get too funky on it. Yeah, that feels right. Daily. We've got bullish order blocks holding us up. I have no other big targets to come for. We're at all-time highs on a lot of places. So really what we want to try and capture, equal highs. Definitely going to mark that.
ES has equal highs too, all the way across, like 3 of them on the bigger time frame.
Yeah, it's the amount of equal highs and lows that I'm seeing, because if we go back to ES, there's equal lows on the 18-hour that I've been salivating for weeks now, and I'm just waiting for us to come back and capture them. But again, I don't want to try to be that one who tries to do the big short and
Force a
recreate my
will on
will.
it.
Yeah, man, let me tell you about my will and what the market will do for me. Not a damn thing. It'll tell me, ha ha ha. What was it? The 5170 area. I had that marked for like a few days, and I tried to force my will on the market on Tuesday, and I took profit on one of my cons and then held one for a loss because I was so convinced we were going to come back and grab the wick. I was just so convinced, and then I was just like, you know what? The market just marketed. It showed me in real time, like, nah, you're not coming for this. And I was like, cool. And then it came for it on Thursday. I was like, bitch it. But anywho, so I've got my equal highs here on the 4-hour. Again, similar thing to ES. We are in the middle of a range, but it's not giving as much expansion vibe. You see how we kind of chunked out right here in comparison? I will mark these equal lows as a potential target. Not necessarily that we will hit them on Monday or Tuesday, but these kinds of areas could be a place of concentration when we do get the big news from CPI, one way or the other. Want to have a realistic target.
CPI on Wednesday, right, or Thursday?
It is on
Wednesday.
Wednesday. One more time, flashing the people. We've got Wednesday, 8:30, core CPI, CPI month over month, and CPI year over year. Shortly after that, we have the FOMC. Somebody's going to be lying to us about something. They're going to have some wholesale inventory month over month. Number the bond auction.
There you go.
Bond auction, exciting. Well, thank you for telling me my microphone's changed. Now get off my screen. Boo. More. Okay, well, let's go on to the next chart. I know my microphone's changed. Thank you. Bye. So some weekly targets. Let's start there. Daily, if we're going strictly strat, I'm gonna just mark my tops and bottoms. We have a calls trigger on the daily. And one thing I love about inside bars, it's always going to be forever what I love about inside bars, is that you have whatever your call entry is going to be on one side is going to be your put exit and vice versa. I don't know how much more simpler things could be. On the daily. And can you guys put in the chat which strategies you guys are currently looking at? No, Nelson, you did not miss QQQ. We just getting started. We started at 10, fam. What was that? No? No? Okay. Stratton ICT, love to see it. Love to see it. So right here, 1 candle is 50% strat. I love an inside bar. Can't get any better than that. Can't get any better than that, yo. So
I
right
honestly
here,
feel like we have to take those highs out before. I feel like the sellers lost their momentum.
I
Like
agree.
it was huge.
I think that
I
Thursday
can
drop
see
was
that.
a short one.
Like if the sellers were gonna still go on, like I mean I could be dead ass wrong, obviously, but I mean for them to whip it right back up like that,
I will show you in real time a couple examples. Right now, while that move happened on Thursday, I had a bias for us coming back up to these certain levels on Friday based off of past experience with the data that was dropped. So we typically get this kind of responsive move.
Stop! Don't make that face again.
I'm gonna keep making faces. This is aggressive. I don't know where this noise is coming from. Tell me not to make a face. Talking to the kids. What's going on? Anywho, I'm looking at these equal highs. Yes, I am gonna keep them marked as a point of reference because I think we could easily come for these. Not saying that we can't, but this response here, I was expecting us to do this on Friday, realistically. I'm gonna go to, let's see, where's a good example? October 6th, yeah, that's a good day.
It's funny.
So, like an example, based off of the data that we had, I'm just showing y'all real quick how sometimes I'll back test the data days. This is the first one of the quarter, and I noticed that we have a lot of large movements on that day. So, example being on October 6th, we had a day where we went that was a 10-point day on October 6th. We come up here, similar thing, a 11-point day. The other example for that, January.
I think it was weird because we also had like some hot job data in the morning that day before that drop, which
Yeah.
gave us like the artificial like push up before the big drop happened, I think.
So yeah. And then we had a Fed speaker at 2 as well.
Oh yeah, the
January-
speaker he just made sure it went down after all that.
yeah, the one I slept through.
It does feel like it's always that way, but don't worry. Your time to shine is coming. Time to shine is right now. I can feel it. What
I
else?
was waiting for it to get a big green like that. It's always that close. Like a done.
July 8th. That was a good one. I'll never forget that day. July 7th. Okay. I just want to show you guys like where I get some of these theories from. From when I go to Forex Factory, and then I come to these dates and I look and see, okay, what do we do on this day? What do we do on that day? Where's it? July. Yeah, that was the one. Let me show y'all the one. This was like the craziest thing. And then we'll get back to the other charts, but just right here, the 5th. Another 10-point day. So I'm showing all this to say, on this particular data release, traditionally what I've seen is that we will have an extreme move in response to whatever comes out, especially if it's the first one of the quarter. So that's something to like mental mark. And part of that comes from this little book that I created because I'm just really nerdy into spreadsheets. So I mean, I can show y'all like how I block it out. I go through and I filter all the data. I try and find the heaviest percentage daily movers based off of the VIX, DXY, IBM, and then I go through and I filter which data days did what. That's where that theory is coming from. We're not going to get into all that. Let's get back to the charts. Sorry, ADHD, squirrel. Y'all are stuck with the substitute teacher. It's kind of like when the substitute comes in and puts on Bill Nye the Science Guy. Good luck, y'all. Good luck. So right now, we've got the daily triggers. If we want to look for something for a swing perspective, I would take these and look at the contract coming into, I don't know how many people like to feel comfortable doing weeklies, but even if you get something for a week out, and if you're not familiar with this site, it's bar chart. Love bar chart. It's a wealth of knowledge, a crazy resource. You can come here and check options prices and volume and all of that. So we're looking for, I would say the 19th if you want to go a week out. And if we triggered, you know, the 520, targeting the 524s, I don't feel like these are too expensive based off of the open interest and volume. If you're looking to get one, if they are too steep in price, we could look at the weekly, and they're $1.70 right now. Open interest did change, but you have great delta and a ton of open interest and volume here. So that's not an issue. But if we're looking for put, the puts target, I would probably position right here at the bottom of the 3 and let that like 5-10 range, because you have to start thinking psych levels. So where we are now is in the middle. 525 psych level, round number. 510 common area for SPY. 508 is probably another good area for SPY if you want to get, you know, a little further out. But the put side, the 511, they've got a decent amount of open interest too if you're looking weekly. The volume's there. The delta, I like anything from swinging to the delta to be above 17 or 18. I don't need to be super heavy in it, especially if you're getting multiple contracts. You can kind of level yourself in and out. This had a lot of open interest come in, you know, almost 3,000 came in on that. And we have almost 10,000 coming on the 523s. So bear in mind that we are reading the options chain as if we are in the middle. Some of these might be spreads that have been purchased based off of the volume. But when you see the open interest change like this, make note of it. Even if you don't trade it, make note of it so you can become more familiar with it. Okay. So those are my dailies. Now we're going to go to QQQ. Let me peek at my bay, my rehab bay.
Oh Lord, I need my headphones.
On God, you need your headphones.
You ain't let me get a pecan?
What?
No, you were no bag tonight. You a soft girl bag?
Mute. Where do I need to mute? How do I mute everyone? Like at once.
Why do you need your headphones so bad?
Because I'm on the Zoom.
He needs his headphones because he's on the Zoom. Help him out.
Yeah, he got the message.
Help this nigga out.
You're like, oh shit.
My bad, y'all.
You I hope you get your headphones. Help them. Okay. I'll worry about that in the morning. QQ. All right, QQQ. Gonna again come to the monthly, draw myself out real quick. See, it's the same repetitive process, especially when I start blank. Come here. Give me my range. Here we are with range. Weekly. Ooh. I would take this one, but I see this as kind of being like relatively equal lows. And for me, when I see this on the weekly, I just want to capture all of these wigs. Because we again have nothing else to the upside. If you kind of see how we're chunking back and forth, we're starting to get that consolidation in this area. So this range, I'm just going to do the top of the bodies, not even like between 436, 446, 437, this range. When we break out of here, we'll be able to understand better what the direction is going to be. And I would say the leading barometers for tech, I don't know how much. Somebody said, come on, man. Come on, man. We'll set this bitch off. No, coming out of this range, I think it's going to be really depending upon NVIDIA and the banks, because when the banks are letting go of more money, tech can do better. They have the ability to get more funds for their projects, but really the top dogs are going to be the top dogs, and all the little people are going to fall by the wayside. So just be mindful of that when you're entering long or short. I'm going to draw my broad information here, off the weekly, and then drop down to the daily. If you haven't noticed, y'all, we're seeing a lot of the same setup. 3-1, 1-3-1. Every time you see a 1, there's consolidation. Every time you see a 3, you've got that expansion. So we want to get funky with it. We can draw this broad information, but I think really this is, again, price kind of rebalancing itself in this range. You see, we didn't leave this area. We didn't leave this area. We just kind of went to the top and to the bottom, and now we're back in the middle, stuck in the middle with you. Clowns to the left of me, jokers on the right. Here we are, stuck in the middle. Going to the 4-hour, want to do some intraday. We are running into a bearish order block. That is good to know. This candle right here, if it starts to poke inside and reject, we could look at it as an inducement and look to take the reversal. But again, I would not go super short or short it super hard, because we could easily bounce off this broad formation and come right back up to retest this area. So I will draw and make note of this 4-hour order block. And I might use this as my put entry, because you see we got that double 1, double inside. Who doesn't love 2 inside? I don't know. So yeah, looking for a possible rejection off of this bearish order block. And then we'll see if we have anything on the smaller time frames that will propel us up. And boom, we have it right here. Right here for you, girl. A bullish order block. So this is going to be my support level, and up there is going to be my resistance. Now I have an expectation. And once again, I'm going to say, I think they're going to keep us sideways until we reach Wednesday. And I'm not saying that we might not go, you know, up here and then come down here. We're just stuck in this range. We want to either break up to the upside and get back to going for those all-time highs, make that higher high, or we got to come down and rebalance and get to making a lower low,
32.
or even a higher low, because we have equal lows here. So if we break, we already cleared those equal lows. The only thing I can think of is we'd have to make a higher low. unless we make another set of equal lows, which would be real wet. But I don't see CPI doing us that way. So just head on a swivel, looking at QQQ contracts.
Last month on the CPI, they drove us up, and then as soon as the report hit, they just took it all the way down. So maybe they going.
Facts.
Just
And
pretty simple.
that's why I say, like, one of the things you'll hear me say often is the market's gonna market. And as best we want to do, to prepare and be mindful of these levels, sometimes it's a matter of waiting for it to hit a certain area before you even enter. So like I might want to go for calls, but I need to see how it's going to respond to some of these lower levels first. Do you mark the previous open and close or just the strat pattern? I will hip you to something else. So far, I've showed you I like the ICT kill zones, and I also like the smart money concept. The other indicator that I F around with a lot because I've gotten lazy, true story, daily, weekly, monthly, yearly open. I don't have to worry about marking the previous day open or close because with this indicator, it marks it for me. Now everybody hit the chat with that, ooh, ah. It literally saves me like an extra 10, 15 minutes worth of work. That's it. But I do put this on so I'm aware of different areas of magnitude. Like, are we going to come back to the previous week open? How are we going to respond to the previous month open or close or low or high? So yes, I do have those markings on there, but I don't actually individually mark them anymore. But I do sometimes verify that they are correct because I don't trust indicators. The reason I don't trust indicators is if you're blindly going off an indicator, you don't know how to set it up yourself. How will you know when the indicator is not indicating what is necessarily true? Let that sink in. That's right. You got to do it manually so you know where they're at. Do that. I'm not mad at that. Did it for years. I'm done with it. I'm done with it. But right here, you can see.
I usually chart the morning high and low too.
I agree with that. A large part of that for me comes from me looking at ES futures overnight to see how we responded to the London session and the Asia session. So you definitely want to keep marking that pre-market high and low. We respond there more times than not. Just like when we get that daily open, look for the true day open, which is kind of at midnight on ES futures versus the New York open. A lot of times we'll come back and hit that true day open as well. Just a second.
Yeah, I gotta learn how to read the futures because I'll be confused by that chart.
Honestly, it's the more you stare at it, the more it absorbs osmosis. It's the same
I think because the
thing.
numbers be different throws me off.
Here's one way you can think of ES futures, SPY, and SPX. Think of them all as sisters, right? ES futures is the older sister. SPY and SPX are like fraternal twins. They're similar, but they are definitely not identical. So whereas you could maybe use, you might be able to use like looking at your SPX chart to kind of trade SPY, but not really because they differentiate by a couple dollars. You can't really use SPY to trade SPX because the points are so different. Like that
I use SPY for volume when it comes to the SPX.
Yes. When I am doing my trading or when I'm on a live session, I will use the SPY volume price ladder to mitigate and gauge some of my own bias because I'm always on the 1 minute and the 3 minute. Sometimes I need to see in real time where the volume is pouring in before I make it irrational.
Yeah, if I see volume coming in and a hammer coming in, like it's go time. You know what I'm saying? Or vice versa. Like on the SPX.
That. So definitely and if you ever if you ever question where you think it's going, one of the things you might want to look at low key is just go over to ES futures and see if we've already clipped either the London low or the Asia low. So just deviating real quick, y'all. Sorry. Let me go here, 30 minutes. When I say like to see where it's going, did we clip the London low? Okay, we already clipped the London low. I can check that off my list. Now I expect us to go higher. That's what I mean when I say it. So, and vice versa. If we're in a downtrend, did we come back and touch the London high? Those are things that I think about when I'm building my thesis. But back to QQQ. What's NVIDIA gonna do? What's NVIDIA gonna do to keep the market going?
Nvidia is real ambiguous right now. She's in that up or down range.
Listen, Nathaniel, Victor, Allen, David. David Allen, like he really he did what he did and he did it well, but I think he's losing steam and there's a gap.
Yeah, that gap below is
That
scaring me.
this is why I brought this one up after QQQ because I
Not so much
want
that 600 gap, but that
this right here,
820.
the 8, right here.
Oh,
This
is
right
that the
here, y'all.
820? Yeah, 823 to
Yeah,
834. That's the one I'm talking about. Yep.
yeah. This
It's
is
got to
why I'm
close
break
that gap before it can go higher. My thoughts.
that.
Sorry.
Hold on, no. That part. Wait for it. That part. That part.
I
Let's
see.
that part. I say that say this. Yes, drop it and then run it up first because where we are with QQQ, it's not just QQQ that's going to lead it. It's going to be the stocks that support QQQ. And if NVIDIA starts to get that falling momentum, even though
Everything.
even though I wanted to just close the gap, it ain't gonna do shit. Ooh, I'm gonna tell Nathaniel Victor David Allen who said that. I'm gonna go back to the chart real quick so you can whisper it over there. I think if we take this gap with force and volume, it will trigger a sell-off. I think psychologically people will get hit. Now, do I think it's gonna come all the way down to Beelzebub down here?
Yeah.
No, I don't think it's gonna come all the way down here. But if we're gonna go to the daily and get some like more realistic targets, here, let me get the rectangle going on this whole.
It's that hammer green candle, the bottom of that one, maybe like
Yes,
740, 770 area. That would be terrible though for the market. Good Lord.
that's okay. So this is where I'm going with it, right? We've got this nice little gap that once we fill this, I'm trying to think psychologically, how is retail going to respond to that? We're going to see this and drop into it, and let's draw the broad information real quick. Let's just get funky with it. Even though I
David
crossed
Charles
these
way
wicks,
low.
the body tells the stories, right? The body tells the stories. Let's stick with that. I'm going to come off of this Doge and drop it down. Drop it down now.
I think they're gonna
Higher
run
top.
this up to a PMI or CPI, whichever one.
You think we run up? I'm feeling sideways. I feel like they will try to eat all of our premiums before they give us a clear direction.
My
I would
theory
love
is
for
the
us to
fake
run
out
up.
theory. Like it fakes the highs and then takes us all the way back down, and then the earnings season runs us all the way back up. That's my bias, I would say, based off of what I'm seeing on Nvidia's chart. But
All I know is I see other stuff that there's other opportunities out there.
that's true.
Absolutely. Absolutely. I'm only using this as a barometer. So when people see QQQ, they're not like, oh yeah, let's go to the moon. I
Right.
think they'll stop us from getting to the moon. And if we do get stopped from going to the moon, I think NVIDIA is going to play a huge part in it. That's where I'm going with that. Because this gap, once it gets filled, I think the lowest we could come is this 790 area, 70, like right here. That's the previous month open, so that'll be an area of magnitude. So if we're looking at like, boom, there's another little kind of small gap on a monthly. I think this is like the final stop, the final frontier. I do not want to see it go lower than that, but I'm not a market maker. I don't get to make the rules. But if you notice where that gap is, there's also a bullish order block. So this would make a valid area for me to say, okay, we could stop here and come back up. Or I
Mm.
might even just wait until we come and hit this and see how we respond to this area before I go back long in the video. That's just a personal thought. I've only traded the video like 4 times.
Yeah, I don't
I
know.
see it. I see it. I respect all those who do what they do with it, but I know who I am, and I'm not in the video girl.
Yeah, Nvidia has them crazy drops that just come at
Man,
unexpected
listen, you
moments.
get the right side of that bad boy. Hey,
You good, right?
Merry Christmas. Merry Christmas.
I caught all the
But,
run ups and got burned on some of them drops.
well, you can't run forever, player.
I know it.
So, yeah, these are just 2 areas to focus on, like 840, 824, 790. Those are my, like, drop points. Because we can clearly see where they could take us if they want to go back up. Previous month open, 940. We can come all the way back up to the top of this broadening formation. Things I'm not going to stress about, we're going to let the market. But again, I say all of that. Now keep that visual and look at how QQQ is right here in the middle. Okay? So if we do drop down, see where we can find some gaps. I'm going to go to the 3-week. It's my favorite little hybrid. See if I can get anything out of that. Ooh, we're inside on the 3-week. 4 days to go. So, like, I just see a lot of wick to the downside. We pushed up. It wouldn't hurt us to come back and retrace in here. Even if we don't drop all the way to the previous month open, I think it would be healthy for the market to come back into this range. Just so we can go higher. Do not get caught in a bull or bear thesis if you're short day, intraday trading. But if you're thinking long term, we are still in an uptrend in the middle of an election year. Regardless of what your politics are, the market's going to do what the market's always done. Repeat patterns. Find the patterns, identify them, stick with what you know. So,
Yeah,
boom, boom, boom. IWM. Who doesn't love the Russell and small caps? Ooh, I do. I really do like IWM.
Yeah, I do too. I was just pulled it up, and like IWM is something to pay attention to, because if IWM can't catch a bid or hold a bid, SPY sensitive to that shit.
Very.
You know what I'm saying?
Pro tip. A lot of the times when I'm looking at SPX, I'm looking at IWM as well. I'm using IWM as my momentum indicator and barometer to really
Do they
make
have a lot of
solid decisions.
overlapping companies?
No. Coincidentally, they
IWM
don't.
super sensitive to all that data though, like really sensitive.
If you go study the Russell, you'll see it's not just small caps, but it's got like some banks and some different kind of like financial sectors in it. And Akamai is completely right. It is very sensitive to the data. It doesn't have a big range, but it has a
Right.
big impact.
Gotcha.
Okay, like it may not be going $5, $10, but those $2, $3 it goes, it affects things greatly in other areas. Especially if you're looking at like, please incorporate IWM into your watch list, and you'll start to make correlations between if it's moving down, and it's not going to always be 100%. Sometimes IWM, SPY, ES, whatever, they can be divergent of one another, but more times than not, they're kind of got the same vibe going. Yeah, same. I'm gonna draw me a little boo thing over here. We already captured these equal highs. Do we have any more equal highs? Not technically speaking, but if you look at this area,
If
would be a nice
IWM
little-
loses 200, SPY's in fucking trouble. Period.
Akamai, when we're done, just let me I'll show you my other chart. I don't want to like hurt people's eyes, but it's like
I think data this week will be real, serious.
well, let's talk through the whole. Let's talk through it, because part of my theories are coming from the strat in that we went 3-2 on the quarter, and I'm thinking, okay, that's a broadening formation right there. When you hit the top, what you got to do? You hit the top, you drop, shut them down, open up shop. Like, that's it. We're gonna roll down a little bit. And we can't continue to run up without grabbing liquidity from somewhere. So it's not a bad thing that we would be going down. It's beneficial for us to continue forward. But don't be surprised if you see us
Drop first.
like they go they gonna hang some people on some long positions. I already know. They're just piling it in. It's kind of funny, kind of.
Yeah, Friday ended us in a terrible range because this could be either the middle of the retrace or it could be just, going back up. We don't really gotta see what's up tomorrow.
You weren't in here yet, so I wasn't rushing to go get it. You just got it.
Say that. Whoever said it, you wasn't rushing either, but you're here now. So right here, we have this bullish order block on the monthly. I'm going to mark it even though I do not think we're going to come all the way down here. I just want to make sure that I am labeling it as a possible area of support or bounce.
I've never seen her do this. She's hosting a call since 10 show 6.
This is correct. Bullish. I'm gonna put bounce because we've already poked into this block. We've taken off from it. So if anything, I expect us to induce maybe
You
this
would-
level.
There's a fair value gap there too, right?
Yep,
There.
that's why I put the fibs on it. You know, fibs are like hot sauce. We throw that shit on everything. So I've got it here, the 0.5, I'll mark it. And here. And I'm only marking, if you notice, I'm only kind of marking the golden zones, the 618, the 0.5, 0.38. I don't need to leave that on there. I just know that a lot of times when you have these order blocks on the higher time frame, we can penetrate them, but we typically penetrate them in a space of like on a fib level. And that's something you can go back and back test if you're feeling nerdy, want to get weird one night. Just be like, I'm gonna sip some wine and see how we respond on these order blocks. But IWM, we cannot afford to come below the yearly open because then we do come down here and descend. Just an FYI, this is the monthly chart. We're going to go to the weekly. Whew, we have something that might save us, this bullish order block here. So I'm going to draw this broad information here. And yearly open, I have it already marked using my handy dandy indicator. We're coming out of a bear block on the weekly. Yeah, that's not favorable. Not what you really want.
Is that a gap? That red one is a gap that we're in up top?
This is a bearish order block.
Oh, that's an order block.
So let me explain real quick. Again, this is from the Smart Money Concepts indicator. If you are able to recognize order blocks, definitely practice drawing them yourself first, so you'll be able to get familiar with them. But after you get there, work smarter, not harder. I have my internal block set to purple and for bullish, and then pink for the bearish. But external liquidity is green and red. So an example of external liquidity on this chart would be, I'm on the weekly time frame. We'd have to get all the way down here on the weekly to get to the external liquidity on the weekly time frame. We ain't got to worry about coming down here unless it's like the craziest black swan event, which the market could market. Like, I'm going to be ready. I'm going to put on some This is our bearish block. This is our bull block. So right now we're coming out of a bear block off of a broadening formation. Based off of this, my theory is that price will continue to push down a bit, but we run into this broadening formation right near the yearly open. And Acclimated mentioned perfectly earlier, we lose 200, it's going to get real interesting. So just pray, use a little hopium. We have other broadening formations that are forming on the daily. However, I personally, I'll say this, from what I know about IWM, we like to trade in channels. And right now, where we are, we're at the top of this channel. So again, I expect a healthy pullback, but I do not want to break below the yearly open. When I come to the weekly, 193 is like where our next bull block is. When I come to the daily, we have clear skies to the bottom. Not clear skies to the bottom. We have an ocean below us that we can jump into. I'm gonna say that.
It's very illiquid.
Yeah, like we have some space to come down. And we could hit this broad information, like we could poke just below and pop back up. So I'm gonna go to another smaller time frame to see if we have any kind of bull block that could save us. Again, I'm not seeing anything pop up. Another thing that gives me pause is we have external liquidity that we just came out of. See how this coloration here is like this red and this is the pink? This is that external liquidity that we were talking about in this indicator. Again, one more time, Smart Money Concepts. This is not a shameless plug. They don't pay me for it, but this is the external liquidity and the internal. So now you see we got that. We captured on the call side. Now we got to come to the put side. And I'm not seeing a lot of huge targets when I drop to these time frames. We've already captured the hourly. Boom, here it is. Here it is. Everything we've been talking about. Yes, thank you, Jesus. So last line of defense. We've got the bull block here on the hourly, and then we step into the external liquidity on the hourly here. If we notice, I know it's really small. I'll try and zoom in. The labels are extremely small. Let's see if I can make them bigger. Normal, that's all you give me. You don't have huge. People with glasses need huge. I need big. Got big AF. No, right here it says strong low. And because it says strong low, I'm going to go ahead and I'm put a mark here. Look for bounce. Anytime we hit the strong lows, you're always going to respond to that because a strong low or a strong high on the hourly, 30, the 15, even the daily, those are usually where you get your changes of character. Changes of character being your market structure shifts. So this strong low is because I bet you we have either a higher low or a lower low here. And boom, here it is. I don't know if you can see it. Let me move that. You guys see that HL there? That's your higher low that we're coming for. So once we come down here, if we do not bounce here, I expect this to be our last line of defense, which again, as previously stated, is right near that 200 level. So that's how we're framing IWM as far as this week goes. But what is our average true range on the weekly? Let's peek at it and see.
I think it definitely wants to at least touch that order block below.
Oh, absolutely. Absolutely. It wants to reach out and touch somebody's hand. Don't think it doesn't.
Yeah. I think we get the fake out, we start high and then it goes down for that below. And after like next week or something, we start moving back up.
Start moving back up. So right here, we know that the ATR on IWM is going to be about $7 or $8. So right here, we have $8 from where we are currently, 204. I mean, right here puts us right within that $8 range. Do I expect it to make the full weekly move? No, I only typically am looking for it to capture 80% of the move. But we have data released this week, so we could come all the way down and then still come all the way back up. 204 plus 8 is 212, and look at where 212 is. We are literally in the middle on ES Futures, NQ, SPY, QQQ. They have us right where they want us. Confused AF. Confused AF. And it's not that we have to be confused. We have to be smart and ready to pivot.
Ready, yeah.
So it's not that you can't get into swing positions. It's just you want to be mindful of how aggressive you are in taking those trades and those plays.
Yeah, it could take us down just to bounce it all the way, you know, off some good, off a good.
And you would still be within the expected weekly move. That's the crazy thing. For anybody who's not aware of how the ATR works, from wherever your weekly open is, if you drop the $7 to the downside, that would be 100% of the move. But if you start to retrace back up, it would still qualify you as 100% of the move because it starts from where the week opens. So you come back to open and you go up $7, you're still within that 100% of that weekly move. If you have to go outside of that range, like we did here, 792 versus 757. Want to peek at XLF. These charts are so lame. I just feel like they pound to the left, me jokers to the right. Here we are, stuck in the middle on these hoes.
It's near the all-time highs. It's like they're trying to bait everyone.
You have to think psychologically. We know we're going to continue up because why? Old patterns. Election year, we're in an uptrend on the higher time frame. Like when you zoom out on the actual charts, we're in an uptrend, but there's still got to be downward momentum for us to continue forward. So XLF, we're at the top of a broadening formation. I would definitely like to capture this swing, but I'm gonna throw it here.
I can't believe it.
Going to the weekly. All right, I'm gonna draw this here as well.
Whatever's going on.
Just so we see how we respond on the smaller time frame.
Danger. Negativity.
So we've come off the broadening formation. On the daily, we've made another 3, 3, 3, 1. I don't know what kind of pattern that is, but that last 3 was weak as hell. Okay. So here we are. If we're triggering from a strat perspective on a daily, we've got 41, 57, or 68 rather. 41, 20. Because I'm not seeing any kind of order block, let me drop down to a smaller time frame. 4 hour. What do we notice again, people? Where are we? Anybody in the chat, tell me where we are right now. We're in the middle. We're in the middle. We've been consolidating. Price can bounce from side to side. This might be, you know, a scalper's paradise. Short targets, 0 days, but very much so indecision. Yes, yes, very much so indecision. Next week. Bond auction and the Fed balance sheets. Lies from the Fed, more lies from the Fed. I feel like they traded sideways. I bet you if I pull up JP Morgan or Citi or anybody else, we're going to have something very similar to the structure. I am going to draw my order block lines so I know where we could possibly reject. Hourly. And my bull blocks all the way down here. Okay, I prefer blocks that are coming off of a broad information. And I would throw some fibs on, but I do not want to make my chart super junky for y'all.
Pull up GS on, if you would, on the daily and see what you think.
It looks just as ghetto as the rest of this shit.
That's on a
To be
daily.
honest. We're
don't-
still, this is Goldman Sachs on the daily, right? If you look, we are
I
still,
like that.
I'm not opposed to it. I do not trust it because we're still in range. We're in this
Yeah.
block. We're in this block. JP Morgan. Similar fashion. We're in this
Like
block.
ranging.
We're in a block.
Stay in that channel, it doesn't move.
Look, we've been consolidating in a block. I'm just going through the bank stocks real quick.
The channel, it doesn't.
Right here. I do like this one though. Aha! Bank of America. You showed your hand.
It's in the channel.
We hit external liquidity on the day. Let's see what Citigroup's doing. Citigroup.
Similar.
One of my favorite people sent me this chart
That's loud.
earlier.
The bullish.
This is the only one that kind of looks like it has some kind of shape, even though we're still in range. At least we got like a top here. But I'm gonna go back to Goldman Sachs. What are the things you like about it, and what are the things you are turned off about it? I personally like the kind of the hammer we got going here. I'd like the hammer to be a little more hammery. But
That's what I like. I like the hammer with a little bit of. It's just so I'm
you
not
like a little tip. Hammer with a little tip.
gonna work.
It'll be light work.
It just
I like
looks
the
like
fact
it just looks like it could take out them equal highs, especially with earnings coming.
all right, well let's get funky with it. I'm gonna draw the broad information off here.
It's definitely at the bottom of that.
So we come down, I'm gonna drop down to the 4-hour. There's the equal highs as you mentioned. Now, where can we go to the bottom? Because that's a big ass gap right there.
I don't think they'll gap it till after earnings. I don't think they'll fill that gap till after earnings.
You don't think we get the gap filled? Everybody loves a little gap filled. I concur with you. I would prefer to see us gap down and then come up for equal highs. I think that would be fire ass setup. And based off of this doji, if we're thinking strat, this could be an actionable signal for reversal to take this liquidity.
True.
That could be, like this turning point, it didn't get enough strength to really make it, and we come back and take this and then fill it. But
Okay,
I'm not going to
yeah.
anticipate that. Hey, they do big ass things. It's a big ass market. A lot of big
Yeah,
asses.
their earnings. Their earnings this week too. Oh. Let me see.
And gold is ripping right now. That's not good for the market.
No.
Yeah, SPY and Q just start tanking a little bit. Drop.
I'm just saying, let's talk through it. Like, as much as we would love for them to continue up, capital card, like credit cards aren't being paid and shit. The Fed keeps lying to us about the money on the books. At some point, I'm not a doomsday prepper, but at some point, the house of cards is gonna fall. I mean,
Can't go forever.
Take it with what you will. I think we're still in an upward trend, but we haven't had technically any kind of correction. We've barely had a real pullback. And if you're thinking you want to know what the percentages are, let me get my handwritten notes out. So anywhere between 1% to 5% drop is going to be your pullback. Between 10 to 19% is going to be your correction. And then 20% plus the economy contracting 2 quarters in a row is technically a crash. One of the things that I like to look at is the historical pattern. We've been on a run for like 17, 18 weeks. If you go back and look at the weekly charts for SPY, 17, every 17, between 14 to 19 weeks in that range, we'll get some kind of pullback or mini correction. It might be anywhere from 5 to 6%. It might be that 1 to 4. But be on the lookout. We are in a good position. We're at the top of the new quarter. They could drop us down just to take us back up and continue right back up. So don't think that coming down is a bad thing. It's really a good buying opportunity. It's honestly what I'm looking for. What can I get long term on distance? Well, we stay gang, but we're not stressing it. It's just a matter of which way are they going to take us first. This right here is the only thing I don't like on the Goldman Sachs, is that 4 hours looking like a doge. Doji.
Delta.
A little dusty ass doji. And these wicks are giving selling pressure. They're giving pressure. I like that as a put entry. We can get all the way up here. This is the little fair value gap. Use that as a little put entry to the downside. That would be an ideal kind of like midweek swing. So just my thoughts on it. Are there any other tickers that somebody might want me to check out or look at? I'm sorry again that I'm not Tin Show. I'm the substitute teacher. I almost put on Bill Nye the Science Guy for y'all in the classroom. Ooh, Johnson & Johnson.
LMT looks good.
Yeah. We got JPM Wells Fargo and City on Friday, so for sure.
And that's why I think all of the financials are stuck in the middle. I like really truthfully, CPI could knee, roots. Okay. Oh, you got Johnson & Johnson real quick. Johnson & Johnson. Let's see. Quarterly, weekly, monthly to the downside. Daily is green though. I like where this daily candle is in position. Let's zoom out and get a full picture. Higher high made, lower low. And we are at the weekly low and the monthly low, obviously because it's a new month. And here's a broad information I can draw. Okay. I like it to the upside from where we are, but we could come right to the middle of this gap and come back down. I have not peeked at the sectors. Portrait. So peeping at the bar chart sectors rotation to monthly. Energy, when we did the bot chat review last month, we saw things were definitely flowing into the energy sector. Communication services, I don't know if Matt's still on here, but I definitely like Verizon. Okay, I see Microsoft because of QQQ. I'm gonna say this, when you're thinking of your stocks, the indices, yes, they move overall together, but you want to think of that inversely. You want to look at, you want to look at Microsoft as Microsoft and then how QQQ is going to respond to Microsoft, because QQQ is built up through other tech stocks. You don't want to necessarily use it as a barometer to say, well, if QQQ is going down, that means Microsoft's automatically going down. No, it's like if Microsoft is going up, that's going to push QQQ up. Same thing with NVIDIA or Apple. Well, not so much Apple anymore. But you understand the gist of what I'm saying. These are the foundation. They're the building blocks that make the structure, not the other way around. But if you see the overall sentiment of the group going down, then you can expect there to be the sympathy play. So like NVIDIA, we examined that and the gap to the downside. If that gap, if we come for it, then that market sentiment will change and will start to affect the other tech stocks. But if, again, NVIDIA is going up and Microsoft is going up and QQQ hasn't necessarily caught up because of whatever other outlying factors there are, you don't want to look at QQQ as like, oh, it's going to go, down real hard or up real hard. No. What are they doing that's going to make QQQ do what it's doing? Or what is going to be happening with something like SMCI or the banks or whatever that's going to make SPY do what it's going to do? SPY isn't the dictator, it's the house. And all of these stocks are rooms within the house. Does that make sense? Yes, no? Okay. So right now we're rotating out of healthcare. Communications, I see 5-day communications, energy, materials. That's something to keep an eye on. And then consumer staples, they're gonna get hit pretty hard. I mean, I love Costco, I love Walmart, I love Target, but we're also about to be going into summertime. So if you haven't already, keep oil stocks on your list. Like Chevron is one that I've kind of been eyeing. I don't trade Oxy that much, but I do like the way Oxy moves, and I do recommend it to some of my mentees. Like, legit a good one. So Johnson & Johnson, Doc, I think it's a great choice to the upside, but again, because we have this kind of fair value gap going on here, I would be cautious. I think that they could trade us up into this area and then drop us back down. And that's only because we're kind of in this range right here. But I definitely get the vibe coming off of this broadening formation with the number of taps we've had. We are going to bounce off of this bullish order block to come back up at least. FedEx. I think FedEx is gonna. Didn't they just lose a contract with U.S. Postal Service? Was it FedEx that lost it, or was that UPS? I don't know who lost it. I forget which one I was reading about, but I know somebody lost their gig, and they're gonna be broke. Where they gonna go? So we're coming off of a weekly. We didn't come in and actually okay. Technically we did. We came all the way back here off of this weekly, and this can technically be considered an inducement to come back here to this area. That's probably why you pushed down so aggressively. The 2-1-2 reversal on the weekly. We're inside on the monthly. Let's try and find where the 50% mark is on the monthly before we get a complete puts bias. We're near the 50% mark. So if you're trading FDX, I would look and see where we're at as far as 267.79 area. Mark that on your charts if you trade this. It's 50% of the monthly. Okay, get your fingers together. There we go. 50% of the monthly, and I would even come down to maybe the 0.38 just as a backup, and I am going to want to see if there's any kind of bullish order blocks in that area on any time frame. Well, right in this area, we would close the gap, and we have a strong low down here. Plus, they have a negative news sentiment. When we zoom out and try and get the full scope of the picture in the chart, where's our market structure right now? Higher high was made. I don't see any equal highs or new equal lows. So I think we continue down at least to this 267.79 area where we could bounce for a second before coming back up to tap. But that's only if we get the right kind of momentum. Because as it stands right now on the daily, we've got this broadening formation that we're running into. Drop it to the 4 hour. You can see it's already trying to capture this wick on the 4 hour, which this coming down could easily trigger a, where it's inside right now, but we break this. Our next target is over here. So 269. Right here at the bottom of these two. So that could be a realistic target right here on the 4 hour. Right before gap, then gap. So I'm gonna look at the stock options for FBX real quick. Okay, all right. For the 12, to the put side, 260. Let's see if there's any kind of volume rolling in. Right now, the 270 put for April the 12th, this is a weekly contract. We have 2,000 volume, only 177 open interest. But the delta is excellent on these contracts, and the pricing is not what I would consider to be too wild or out of the realm. But if we wanted to go further out and play a bit further out, let's say we wanted to play the 260s for an additional week out. Not my favorite on the delta by any means, but the open interest is pretty hefty. Small change, but it's a psych level, 260. You could even get away with, like, spread isn't bad. The spread isn't bad. I don't like any spreads over 15 points. So that's just something to be mindful of. Okay. So that's to the put side. To the call side, I don't know who they're gonna call, because it's got that momentum. But if we do bounce up, we want to look at psych levels. So 275 calls. 275. Not the craziest amount of open interest. That's too close. The pricing's not my favorite on that, so I would look at the 285. 290 is not even bad. You can make these shake a little bit. These might go up 20, 30%. They're right now $37, 38, 35, right in that range. Tons of open interest, a decent amount of volume. I'm not a fan of the delta on these. That delta is hella low. But if they want to swing us up, which the market's the market, we could come right up to like 280. So it is plausible, it is possible. And these are not the weekly expiration, these are the week after. I believe these are the monthly expiration. Yeah, the 19th. So something to bear in mind. Okay. Knee. Job art information. Get to the monthly first. Goofy. Goofy. Well, I mean, it kind of lined up perfectly, so we're gonna let it ride. We're gonna let it ride. I have mixed feelings about this, and it's mainly because the wick does the damage, the body tells the story. So right now, our body's closing within this range. When I go to the weekly, we've already come up, tap down, come up. It would make sense for us to come back and hit this bullish order block one more again. Going to drop to the daily. It's giving off good vibrations. I just don't trust it. And it's not that we can't come up here and close this gap, because we could easily do that. It's just the way we're hitting this broadening formation. We've come up here, made another like higher high, lower high made. We haven't made a lower low in a grip. So yeah, we could easily pop back up, take this gap, and then we could reject off of this bearish order block. So depending on your preference on trading it, I do not know how aggressively this stock moves. I'm not going to speak on it one way or the other, but I would proceed with caution because of where we are in this range on this broadening formation. But there's a gap here that would be real hot and sweet to just come and capture. Daily gap there, but we also have a gap here. But before we get to this gap, we have the bull block here. That's on the weekly. So you can't see it here, but like, boom. I don't think we come back to here. I think we get stopped here before we enter this area, personally. Yeah. Let's see. And root. Root. Do you want me to look at the contracts as well? Here, I'll do that too. We'll go. It's Tira energy. So on a weekly basis, let's see where the open interest are. 66 calls. 65 gap. Ooh. Ooh. Okay. The delta's pretty decent on these, and the price is right. Yeah, that's not bad at all. I would probably go safer and just go for the 55s over the 56 because I want my shit to go into money sooner than later. On the put side, for a weekly contract, let me see where are we? That is possible. So I would be looking at 62 on the put side, 62 or 63. Not a crazy amount of volume or open interest, but again, depending on how we respond on Wednesday to things, might see how things would set up. And I would honestly look, oh, Celsius, don't you know that's my shit? This brought to you by Celsius. They run my life. For real. Let's see. Microsoft.
Still gotta try that.
Oh, excuse me. You said what? You still haven't tried that?
I haven't tried it yet. I gotta try it. Anyway. Like an energy drink.
Okay. Because I'm practicing. Shameless plug. This session is brought to you by Celsius, the only thing that keeps me awake because my family keeps me up day and night. They're delicious, nutritious, no artificial sugars. If you are not used to energy drinks, don't drink more than one a day. They will keep you up. No jitters though. This is not a 5-hour energy. They come in a variety of flavors. It feels comfortable in the hand. Just saying. All right, that's my shameless plug.
Now definitely.
So back to I'm not a Red Bull drinker anymore. Anytime I drink Red Bull, it just reminds me of vodka, and it's the time of my life to go back to.
Mhm.
Straight up, like they need to put me on the commercial ASAP. Listen, I need to start a YouTube channel, and every time I'll be like, oh. But no, for real, Microsoft, we got that. We're at the top of the new month. Let's keep it a stack. Like, of course, we're trading inside. We haven't necessarily uncoupled from the monthly or anything crazy. So I'm drawing this range just to get a feel for it, but they've got us right where they want us. Staring at these lines on the chart saying, which way we gonna go? I would love to capture these wicks to the downside. I would. But to come all the way back to yearly open, that's a tall order. That's a tall order. And let's get real. The weekly move is 15%, 15 points. Yeah. So what's the monthly move? Monthly move is 31 points. So based off where we opened on the monthly, right here, we might get to this bullish order block at best. Maybe induce a little bit into this gap at best. And I will be drawing some horizontals there because you've got a double order bull block right here. They're stacked on top of each other. So this is a heavy area of support on Microsoft. And if we're going back and looking at QQQ as well, coming off of that bear block, 4 hour here, Microsoft isn't giving me any kind of like bearish vibes. We're kind of got this channel going where we're in range, but we're still in that uptrend. And I hope you guys can see it. Let me turn off the indicators real quick. Like this right here. We can even get funky with income here. We'll get these outliers. But we're still moving in an upward direction. We could squeeze up and then down. CPIs on Wednesday, everything will be affected by it. Your Roth needs to go up only. And are people mixing Celsius with liquor? No. But I've thought about it. For those looking at Microsoft, are you looking for longer dated swings or are you looking for weekly, maybe the monthly expiration? Can you let me know in the chat what you're looking for? Because that's going to skew my bias for what I'm about to look at. No comment? Two.
Microsoft, I
Swings
don't
and
know,
monthly.
because they move slow sometimes.
Right. Yeah, I've never been like, oh, let me get this day trade on Microsoft. No.
They do have
They're
like
not
a random day where they're going up, but it's so hard to catch that.
all right, let's look at things, tools we can use to maybe catch it. Let's try some shit. It's a lagger, but it's an oldie but goodie. A little RSI never hurt nobody. So as it stands, we've got the 3-1. We're riding this trend. I would love to see us open up here, trend line bounce and break. The previous month open, we're not that far off from it, really truthfully. And we could afford to come down here before we take off again without doing too much damage. If I have to guess, based off of just eyeballing this would be a point 0.38, if nothing, maybe 0.3. Boom. fibs like hot sauce on everything. So like, yeah, just something to make a mental note of. Like it's this right here, this monthly open is kind of a fib level. It's like a shady fib on the monthly. I would mark this area 411 and 411 just for point of reference, because it still doesn't take the month two down. It's going to feel aggressive, but we would still technically be inside month if we came here. And this could be another jump point to take us right to a 2 up on the monthly. So just put that in your back burner. Let this be, your put target. And even if you're not taking puts and you want to go long, see if we can come to this level first before shooting off. Let me go ahead and mark. Let me go ahead and mark the 0.5 as well. Don't want to be discriminatory, but we've already kind of hit at this level. We hit the 0.618 wicks right off of it. That's a sign. So I have bullish vibe. I just feel like we're waiting on the data. And I'm going to keep coming back to that point. We've had a great month so far for this first week of April. And I think that if we go ahead and pursue the long side of things without a bias, like don't rush in off the first trigger, but definitely take a step back and say, okay, we are going to pull back to go forward. Like Sal keeps mentioning, draw on liquidity. We can't keep going up without getting some momentum from somewhere. So these right here, these would be nice little targets, but we already hit this one here. So while that looked really cute to hit the 0.618 here, now you look at it, this is still that tech in that range. See, this is the range that QQQ is in. So the 4 hour, we're still in range. We haven't picked a side, but I definitely want to see us hit certain levels before I that little gappy to gap. We might get a gap tap, but yeah, before I go long for long dated calls, I'm looking for us to do a trend line bounce and break to the downside. Come here, grab some of these orders, and then shoot back up. That's how I view it. I can be completely wrong. I've been right before, but I could also be wrong. So it's not financial advice. Who else wants to look at what? Oh shit. I did not even realize it's super late, y'all. I do not want to keep you guys here all night. I apologize. I apologize. Rude, Celsius. Okay. Celsius. Let's see, monthly. Ooh. Ugly. Ugly little candle there. And draw this broad information, right, Chandra? Yeah, this right here. This looks to me like an actionable signal on the strat side of things. He did make a broad information on this weekly as well. So I will come for that. I do not like the angle on that. I think we come back and we can at least come into this gap a bit more. So when situations like this arise, I like to throw fibs on from a swing point. So halfway into the gap would be about here. I wouldn't be looking to touch Celsius for swing from the swing perspective until we hit the 0.5 area, which is the 74.13. I'd want to see us come here, bounce to go long, but I would also want to see us break below here to continue for put because we're kind of stuck in the middle. And if we retrace off of this broadening formation down here, this gives us a nice range to come back up. But vice versa, if we break through here, this is a nice reasonable area to come back down to. Celsius on the month, what is this ATR? Okay, so what's it on the weekly? $8 either side. Yeah. So we could easily come down here or come back up here. Just thought. Rude. What the hell? Don't sound crazy when I ask this, but what is root? What is root? Somebody tell me what root is. Oh, it's an insurance company. Okay. Okay. They don't pay dividends. Busted. Insurance. Insurance is a scam. They insure you pay, and then when you do get a claim, they jack your premium up. Get to. So right now we've got three white shoulders on the monthly. It's strong. That's a strong ass weekly candle. There it is. There we go. There we go. So we run into possible resistance at 91.97 where a bearish order block is. And up down. Yeah. So let's look at the contract. I want to see where the bond's touring. But the level I would mark for root is that 91.97. For sure. If you're long, just be mindful of that we could run into that right off the top of that broadening formation, and that'd be a great put entry. But if we can find on a smaller time frame an entry with off of a bullish block, then that would be a good run up. So 91. Open interest at the 50? You gotta be kidding me. 50's all the way down here. I know you lying. I know you lying. On the baby. Is this stock in the middle of some kind of squeeze? All right, real quick. I just want to check and see if it's on the squeeze list. All right, cool. It's just surprising to see that much open interest for the monthlies that far out of the money. Not saying that they can't still shake a little ass, but weekly. Oh, it went crazy dumb. That's why. Okay, adjusting. Weekly is usually $8. Whew. Like this is not looking right on the chart. Daily move is usually 6. Okay. So we're at 82 now. We pop up to 91. Call. All the premiums are juiced. The implied volatility is not worth it right now. Just a FYI, like the IV crush is not worth it, in my opinion, for what they're doing right now. But that is a personal decision you'd have to make. Because to come all the way down to 50, based off of the open interest I saw for next week, again, going back to the 19, and not the supplement, but the OPEC. This is where the majority of our volume is at these 50s. They're currently 55. We could do something with it, but it's not, 100% for certain. The IV is extremely high. That delta is extremely low. It's a lotto almost.
Sarah,
Yes, sir.
look at your phone if you don't mind me asking.
What, sir?
Look at your phone.
Bet.
All right. Thank you.
But that's my thoughts on Root, especially considering they had such an explosive move at this particular time. So if you are trying to trade it, proceed with caution. You're gonna want to watch the flow on that. Anyone else have anything else they want to look at? Is that the last of it? Wait, let's see. Lulu, I see you. All right, so we're gonna come back to the monthly. Draw my broad information, make it real quick light. Lulu's been on a run. I don't know if y'all been like catching it, but for real, Lulu's that I'm happy to see them kind of fall off of a cliff. These expensive ass stretchy pants. Quit playing with it. Okay, I'm gonna come into here in this range and drop into the weekly. We are hitting a bullish order block. It looks like it wants to bust through. The next area of magnitude would be the previous year open. Let's be honest about where we are in the whole space, the market and everything. We have people who are struggling to pay their bills. Are they really about to be buying some stretchy pants? Like
Honestly,
that's just
people are irresponsible, so you never know.
people are irresponsible until it's time to eat. And I don't know if you've been to the grocery store lately, but I bought some ribeyes from Costco that were like more expensive than the last ones I bought. And I just keep buying bitches and keep looking at my bill like every time this $300, $400 is looking real strange at the register. I'm just saying, like, from a practical standpoint, I'm not saying that Lulu isn't a great company, but fundamentally, when you think about what people need and where they're complaining about things like this is consumer discretionary, technically. Like it's not a staple. And if we come back to the sectors over here, discretionary, it's here, but when we look at it on the monthly, it's down here. Okay, so let's framework here. We could hit this broadening formation and come back to this area of magnitude, which is our previous year open, and then pop right back up. Because technically speaking, even though I can't stand this company, we're still in an uptrend. We are. We hit the higher high, and it looks from an ICC glance that we are in premium zone. So you always want to short out of premium and then go long out of discount. That's something to bear in mind on a daily time frame. we've got this big ass gap that we could come back and fill. But before we do that, we want to come down a little bit further. And we'll go to the 4-hour. Yeah, I easily see what's the monthly ATR, because we could really take it and get funky with it. It moves 56 points in a month. 56 points in a month. That's a hell of a lot. 393, 40 of those moves already been done. So that leaves us what? Another 15, 20 points. 15, 20 points. 20 points off of 356 is not too far off the yearly open. This is plausible. This is within range. We've captured these 2 wicks, go down, but if we wanted to, we could technically come all the way down here and still be in range. Does that make sense? Yay, nay? Are you following me? Willie Bill? Billy? Willie? Why do people call William Bill? Side note. Just thought. So if you're looking to find where the volume is, no idea. I wanted that since I was a child.
The one I
So
never
I'm gonna
understood was
was which one?
the nickname for Richard, which is Dick.
Richard and Dick. Different.
Not sure.
Right. When Lulu moves, it moves. Not gonna deny that about it. Not gonna deny that. But if we're looking at the monthly contract, I want to see where the volume's pouring in. Where's the open interest at? I'm not feeling at all these monthly contracts. Let's see if we got anything on the weekly. Like, shit's looking mad light, home. We got the 380 calls with some shit. Pardon my French, but the 380 calls, that's it. Let's see, we got 375 the week after. So it looks like calls have the volume, and based off of where we're positioned on the chart, it makes sense. You know, we could easily pop back up to this area, but as it stands right now, we've got a little gap there and a little gap there, and that's where the 380 calls are coming into play, at this gap. So where can we find on a smaller time frame any kind of order block to give us some kind of support to get there? So anything after 390, we want to be cautious of. We run into a bearish block. So that could be an area of resistance. And here's an instance where I might throw on the RSI. I want to see how low are we. We are in the dirt. We are in the dirt. In the dirt. And this is our bull block right here on the daily. We're in the middle of it. So depending on how we open up, we could open below this, and this might be the area we go to. But if we open above this, those 380 calls are in play. And you want to look at the 380 calls for this weekly expiration are currently priced below 50. I'm not a fan at all of the delta on these. I prefer the delta on the 370s. 15, you know, it's lower than I would like. The 367's a little bit better, but the price point might not be worth it because, again, we have data release, and I do not know how that will affect things such as consumer discretionary stuff. All right. Any other tickers? Any other questions? This session's brought to you by Celsius, another shameless plug. Delicious, nutritious, filled with energy. It keeps me going. I'll be up in a few hours. Literally, in 4 hours, I will be up. But if you guys don't mind, I'm going to sign off. I appreciate you guys spending time with me. I'll try and tighten up my classes so I can be more effective for y'all. But you know, saw Tensho had, he had a little cough, so we had to not leave y'all hungry or off the table.
Have a good night. Everybody take it easy.
Same. Oh, shameless plug. For those of you who haven't joined Swing and Pain, check out me and J Money. Love it. Meow meow. No, thank you. Thank you, Evie. Thank you, thank you, Amy. Thank you all for showing up and giving a damn. It's really what it matters, like showing up and learning, diving in. Give yourself some like credit and kudos for real, because a lot of people would just have turned in and not even joined. So study, make notes of the areas where I made mention to the block, because those will be areas we will come back to, guaranteed. Night, y'all.